afternoon, everybody. Welcome to Trader Merlin. It is your Thursday edition. Sorry I'm late. I'm flustered. I got the show started late. Todd and I were up late last night recording a bunch of videos. So, a little disheveled. I need to shave. I know. It's tough life over here. Anyway, hope you all had a great trading week. Sorry I missed you yesterday, but it was just a busy day for me, and I couldn't make it into to do the show. Even though we did see markets break to, well, most of them, to all-time highs, just as a disclosure piece. So you guys know I was short position on the triple Qs. Told you, hits my stop loss, I'm out, and that was above the highs we established back in January. So I'm out of my short position there. There we go. I had to switch all over the site to find this. It's because I started late, Lisa. I literally started right at 2 o'clock today, so I didn't get an early lead time to build the show today. Been all hands on deck doing other stuff, so apologize for being late. That's on me. So let me go into something I was watching yesterday. Yes, happy birthday, Thomasina. There you go. This is what I wanted to discuss today. It was an interesting earnings announcement, to be sure. A lot of people are going against Disney and talking bad about Disney and how they're in major troubles. Well, their earnings were pretty damn good. I do have some numbers here, which I will show you. I think I have those right here. These are Disney's numbers as they were released yesterday. And I'll show you those. Actually, they were released Tuesday night. I'll show you the numbers here in just a second. We can look at that chart of Disney as well. But their earnings per share, they came out at $1.22 versus 99 cents expectations. I thought that was pretty impressive. And then their revenue was slightly less than expected. Now, here's the real kicker for what happened with Disney. With Disney, first off, there were a ton of deals that were done. And number two, it was cost cutting. We actually talked about this on the last quarter's earnings, I think Q4's earnings, and was talking about how the CEO had come out and made it a point that, look, our goal is cost cutting, big time. We're cutting a lot of costs, and apparently that is done very well. They were talking, I didn't read through the full earnings announcement, and I wanted to watch the conference call, but I didn't get time. Looks like they've done a tremendous job at cutting costs. Now, if you look what happened with Disney's share price, old Mickey's having a good one. Here's Disney. You had that big gap up. Their earnings were reported last night, and they came out after, I think it was last night or this morning. Let me make sure I got my numbers right there. They reported on Wednesday. So it was this morning. Jumped up and pretty much stayed up there. You had a gain of about 11.5% for Disney. Now, while it looks amazing, remember there was a long period of time where some of the viewers here were asking me, what should we do with Disney? And I kept saying, until we break that downtrend line, stay out of it. And in this case, we broke it back here on, let's call it the November 23rd. And ever since then, just been rocking to the upside. Now, the big question is this that turning point where all of a sudden Disney now has fixed their ailments and now going to move towards challenging those all-time highs? I'll bring the all-time highs up here so you can see. That goes back to the high point here in March of 2021 when they were out around $203. Now, of course, we are sitting right now at 110.54 as of market close. It's down a little bit in the after hours, but a lot of people are now getting excited about Disney again. And it's like, well, hold on. They did really well. They had some real good numbers. They're probably going to do some of the account controls that Netflix and other companies have done. So all in all, I think it does look good for Disney, but you never want to buy something after that kind of jump up, right? You don't want to buy that big old gap like that. Wait for it to potentially close that gap before jumping onto Disney here. So I thought that was a good start to the day looking at earnings for Disney. And of course, I had some fun with my graphic here. Now, I wanted to do a couple different graphics. Then this goes into two different questions. So the first question today was about Disney's earnings. I talk about that, which I wanted to talk about anyway. The second one, which I have not had a chance to update with my AI graphics. As you guys know, I always try to do some kind of AI graphic to augment my conversation, my discussion. So I'm going to actually make these right now. I will bear with me as I take a second to copy this stuff over and show you the new graphic for today. All right, so paste that one in. So one of the questions that's come through has been about AI. Many of you asking more and more about AI. Can we talk more about AI? Look, it's not my area of expertise. I'm not going to claim that it is. However, I have been following a lot of companies out there. And I thought since we had Disney report such great earnings, let's go and show you this one. All right. So here is the the second graphic I wanted to show today. And you'll notice I tried to have it show me with Mickey Mouse celebrating a great earnings announcement surrounded by a bunch of AI. And you notice that did draw some robots in there, which I thought was cool. You know, robots are a nice representation of AI, but didn't really drive home what I was looking for with regards to AI. And that deals with a company that reported earnings, and that looks like this. It's in the chip space. So the other question I got before I go to our markets overall is this one. Can you explain what ARM does? I don't get it. So how many of you know, you've heard the name ARM, how many of you know exactly what they do, right? Because I think there's a misconception that they're a chip manufacturing company, that ARM out of the UK, which did an IPO last year, to a lot of fanfare, a lot of publicity. A lot of people were really excited about ARM, and rightfully so. I think when you look at the technology and what it does, it's a break from the norm, the traditional standard. So how many of you know exactly what they do? Yes, no, maybe. I don't even know what ARM is. Type in the chat, let me know. Tom says, that gravity rocket looks hypodermic and not so hyper. Yeah, AI really made some really weird graphic. It does look like a hypodermic needle. I thought they were software. No, they're not software. So let me, to my ability, explain it to you, right? I am not a semiconductor expert. I find the industry fascinating. When you look at what Intel and AMD does, their chips are, x86, right? I think x86 are the chips. That is a proprietary technology by Intel. Intel licensed the technology to AMD to make x86 chips, which is kind of interesting. You're now licensing it to your biggest competitor. That seemed very strange to me. But the way x86 works is their chips that you buy from Intel or AMD are basically the instruction set for your whole computer. Right? You plug in that chip and it says, you go here, you do this, you do that, you do this, you do this. So basically everything in your computer is dependent on the CPU, the central processing unit, right? It's saying, we are the one that dictates what happens. You're all just pawns in our chess game. That to me is how it looks like x86 works. You buy the Intel or AMD processor, you plug it in, and all of these devices are built to function on the specifications and directions from the CPU chip, if that makes sense. So those directions are standardized. That's x86, and Intel licensed that out. So basically, when you have a central processing unit, all of your components for your computer are designed to interface with the instruction set from your CPU. So if the CPU is inefficient, the CPU does unnecessary transactions or unnecessary processes, which you don't need because you don't use them, you're wasting resources, you're wasting time, and it's gonna, because that chip is doing so many things, because it has to run this entire computer and all of its functions, CPUs can get very hot. What ARM does is they don't make chips, just so everybody understands. They do not actually have a plant. They don't build chips. They don't do anything like that. As Tom says, they design chips and outsources productions of the chip's boundaries. Correct. So what ARM does is says, what's your application? And you're like, I'm a cell phone manufacturer. So Intel's chip is probably not going to work for this one. I need something very specific. I need a very light application. What I want is a chipset that's built around my application, whereas your computer is built around your chip. It's kind of the reverse order of operations. So Intel is building a chip. You build what you want on top of our program because we are the brain of this computer. What ARM is saying is, what do you want your process, your system, your chip to do? And we will make that happen in the most efficient way possible by designing the components. With Intel, you buy the chip. It's yours. You own that chip. With ARM, you're licensing the technology. And from my experience, at least over the past few years, you tend to make a lot more money with licensing of products. So ARM is licensing their design functionality. So let's say I create the Merlin phone, right? It's a new crazy cell phone. I need a very targeted instruction set. I needed to do these things, and here's the list of things I want this chip to do. Make that happen by creating a custom chipset around that. That to me seems to be why ARM has been, looked at as like, wow, this is an industry game changer. Now, some people have been saying that this is an NVIDIA killer. I don't believe so. Could ARM create the designs to compete with the A100 NVIDIA chip? Probably at some point. But it seems to me like their real strength is just in creating a design around your product or service. So if you have a design, an idea for a technology, they'll look and say, what chipset configuration? How do we build it to be optimal for your setting? Whereas traditionally today, you have to make your software fit the chip setting, if that makes sense. I hope I explained that right. It's kind of it's a weird paradigm shift in my mind. Private says microprocessors, and I think that's why I wanted to explain it a little bit here today, Mike, because I think that it's wrong. I don't think that they're microprocessors. They're architects. They're builders of systems, as opposed to we make a chip, you buy our chip. We make a chip, you buy our chip. That's Intel, right? Oh, get the new i9. That's their model. Whereas ARM is saying, hey, Samsung, you want something special? Okay, we'll build it for you. We'll design it for you, and then we'll license that intellectual property. I read a lot of conflicting numbers out there, so I almost don't want to mention these numbers. But the guy was saying that there's 12 billion chips out there of ARM licensed chips, and 6 billion of those are in cell phones. And I found that kind of fascinating. I want to dig deeper into those numbers because that's obviously a phenomenal rate of chips out there that are using their technology. The reason that was brought up is Merlin asked again the question of what do they do? That's it. It's a different design system. You know, I've talked on the show the other day about innovation in yesterday's or Tuesday's show. What the hell day is it? I didn't know show it. So Tuesday's show, we talked about innovation in the digital world and how things might be moving towards a digital money, and what are some of the technologies there that may be exploiting and taking advantage and create investment opportunities in that field. ARM seems to be turning the computing industry on its head, because we're all used to going down to the store, buying a CPU, building our own computer. That's not necessarily going to be the way going forward anymore. It'll be kind of custom tailored design parameters to fit what you want to do. For example, you know, when I built the computer for this show, I specifically went and looked at resources that were designed for streaming and high-end video, so I didn't have any lags or anything like that. I actually took that design aspect on myself, but I still use Intel's or AMD's chip. With ARM, it's a much deeper thought process of how do all of my individual components work, optimize them, let's build that chip and go for it. So once they design those chips, they'll outsource it to a manufacturer who will build the chips for them. So that's really what they yes. So it is a type, because it is ultimately, Margaret, the chip runs everything. But the point I was making is Intel is you buy the chip and there's no real configuration. You're not going to say, can I get the i9 with this modified and that tweaked? You're buying the i9 processor. ARM is saying you want this to be tailored more for streaming video. You want nothing to do with word processing. Great, we can remove all that feature and we'll custom build something for you. So technically it's still going to be a central processing unit, but it's one that's going to be more designed to a specific application or purpose. Now, it's some of the terms that I found interesting in this. If you look at what ARM means, so you've got the acronym up there is ARM. It actually stands for Acorn Risk Machine. It's Acorn RICS, and I forgot what RICS stands for. It's like resource intensive. It's basically saying, let's figure out how to allocate the resources in the most efficient way so we don't waste any time, any energy, any speed, any productivity. It's all targeted directly to what you want to do. Now, that may not mean a lot to you and I as consumers, right? We just want our devices to work. But if you look at Intel computers, at least in my opinion, they can get really bogged down because it's doing so many background procedures. I mean, if you go right now and go Control-Alt-Delete on your PC and you go to Task Manager, you've got 200 different processes that are running in the background. Of those 200, maybe 100 of those can just be killed. They don't need to be running right now because they're not using those services. Tom says, I don't see much difference between any company that designs chips and has TS, Taiwan Semiconductors, and other produce the chips. The key is the ability to produce at nanometer level and keep shrinking the circuits. Well, that's a different discussion in my mind, Tom. So I think that the power is going to be getting more processing power per chip, right? So that obviously means getting that nanometer smaller and being able to do more transactions or more processes on each chip. And that, of course, need to get smaller and smaller and smaller. However, the chip designs, I think, is crucial to tailor to a specific application. The SPX, okay, let me go 1 second. Let's go here to, I want to go to the ARM chip because today they had their earnings. And man, what a blowout. You know, they did their IPO back here they did the IPO on September 14th of last year. And I never really had a say in it. You know, a lot of times I'm anti-IPO. I just didn't know enough about what ARM did and how they functioned. It seemed kind of a strange business proposition to me. But the deeper you dig, you realize that they are in a tremendous amount of relationships and deals with companies that are top tier, top shelf companies. Now, to see it jump 47.89% today is jaw-dropping. I have no stake in this game. I do not own ARM. Some of you may own ARM. Again, this is one of those things where I'm not chasing it. I would not be buying ARM right now. But I think going forward, it is interesting to see that model change of chip manufacturing. It's not just cookie cutter off the shelf. It's custom tailored, built and designed stuff. And that's where ARM's making their premium. And they're doing quite a bit of it. So that's my take on what they do, Merlin. I hope that helps you get it a little bit more. You know, obviously everybody likes to see a 47% jump if they're holding it, but I don't own any of it myself. So there we go. All right, what else do I have for you today? Let me go to a question here from Big Ab. He says the SPX is roughly 12% beyond its 200-period moving average. Time to protect some positions. Seems major overboughtness. Yeah, I mean, look, I already took a stab at going short on the NASDAQ and got stopped out on Wednesday. So a little frustrated there. That was $1,200. So it's funny. I've been going counter trend. Two of my worst trades this year already have been counter trend trades. One of them was going long on Boyle, which got stopped out. And then the other one was going short on the NASDAQ, got stopped out. Going counter trend is a very dangerous prospect, my friends. I've had a lot of other small, consistent winners, but those were two that did not do very well for me. So let's go and add in. I'm going to go to the SPX since you quoted the SPX. And let's go add in a moving average on here just so we can see the extent to which you were talking about. We'll go to moving average. I'll do simple. I don't know if you're doing exponential, Big Ab. On long-term charts like daily, I like to use the simple moving average. On its and intraday and shorter time frames, I actually like to use the exponential. So here's your 200-period moving average. You know, you look at this, and I operate off a belief which I think I've explained to you guys many times before, but for those who might be new, you know, the analogy I like to use is if price is moving in any direction, let's say it's moving the direction of my arm right now, and that's moving up at, let's say, I don't know, a 30-degree slope. Okay, great, that's fine and dandy. That now becomes your moving average. And if price is a rubber band that moves above and below that line, then you get an idea of how overbought or oversold something might be. So in that case of, you know, a line moving up, let's say 30 degrees, if I take the rubber band and I pull it 1 inch away from my wrist, no big deal. I'm not worried about it snapping back or the pain that it might happen. But now I move it away, let's say 4 inches, and like, oh gosh, that's going to sting a little bit. In this example here, when you look at the same analogy I just made with the arm, that blue line would be your arm, right? Not the chip maker, but your actual physical arm. And price right now is that rubber band. So look how much higher rubber band is than current price. Typically, when you get these big stretches, these extensions away, you do get big pullbacks that come snapping back down to the average. And, you know, if you look at the last time we were that high was back here in July of 2023, right? We were pretty extended above it. It won't really work with my numbers here, but let me see. Yeah, it's not going to work on this one because I have it on Snap, unfortunately. I was going to try to draw this line and see exactly what that rate is. But let me go to here and go to the high. You know, you were 12.3% roughly on the last time back in July. And here we are today. I'll go to the moving average and go to where we are right now. You know, we're 12% above it. So we're pretty much at that same point, that extension. Now, I'll look back historically and see, are there other times when we were 12% above? Right? And, you know, just because it's above its moving average doesn't mean it doesn't have to go back, right? You can look here, and from June of 2020, we didn't cross back below that 20-period moving average until January of 2022. So a year and a half, it didn't break below that moving average. Great. I mean, that obviously is a good thing for anybody who's bullish. And it looks like at the peak, right before it fell apart, we were only I think it's like 9%. Yeah, 9.46. So I was kind of looking for extremes out here to maybe just set another example of, what's the high? Is this kind of too much? Are we way too high above that moving average? Let's go right here. Notice the last time that we were about 12% above it was back in February of 2020. We came snapping back. Of course, that's a bit of an anomaly. You can go back here into 2018. We also were very extended above that 200 period moving average. That was about 13%. So I would agree with you, Big Ab, that I think we are overextended. I think it's we're a bit long in the tooth, as John O'Donnell would say. But trying to go counter trend is a dangerous thing. I think what you said there is actually probably the best comment, which is time to protect some positions. So it's not to say load the boat short, right? But Big Eb, I know you've got a monster winner going in NVIDIA, and I mentioned this to you the other day, and my other friends who own it, I'm like, I want to move that stop loss up. Well, I think NVIDIA is going to do great, but we've gotten so overextended since, those October lows. Why not lock in a little bit of profit, right? If we get a 30% pullback or 20% pullback from current price, great. It feels like it's coming, and I do think that you're right. I think we are overextended at this point, but as we all know, the markets can remain irrational longer than you can remain solvent. So I love the fact we're that high up, but it makes me nervous. Rob C says, what moving average? 200. 200 period moving average is kind of the legacy long-term, big mark that institutions will be looking at. I read a prospectus years ago from a mutual fund that said they're not allowed to hold positions in a stock that's underneath their 200 period moving average. I thought that was interesting. It's like in a mutual fund perspective. Of course, that was like 10 years ago. But and a lot of people are looking at that 200 period moving average as the big trend. And of course, in this picture, that trend has been looking phenomenal since we really kind of curved and started to move back up back in 2023. So it looks great. We're a bit overextended right now. I do think you'll probably see a pullback. I just don't know when it's going to come. And I've been burned a few times trying to anticipate that a little bit too early, as I did, last week. I shorted the Qs. Things worked out great on Microsoft and Google's earnings. We were down pretty good for a day, and all of a sudden, boing, ripped back up because of Apple and Amazon and Facebook. Thank you for ruining my trade there. But yeah, 50 is another one that people commonly use, but the 200 is the big one. Yeah, we were overextended for years. Well, not for years, right? We had this big pullback here that happened in 2023. I mean, that was a good one. That was a great one. I actually thought we were going to continue on down a bit further, right? You guys know I had some bigger short trades on and just took my profits. Fine, great. You look at that long-term chart. Yeah, markets are built to go up over time. This is just what happens. However, I would look at what's happened recently, and it does seem like a bit of an anomaly. It does seem like a little bit of a stretch. Let me get some of these lines off here. A little bit of a stretch right now, but you never know. Could keep on going as long as money keeps buying into the markets. Remember, we are built into a system that every month buys. Every month, there's billions of dollars pouring into the market automatically because you all are in 401ks. Anybody who's got a 401k, you are helping this all-time high, and you are continually pushing prices up because it's not just your money. It's all your coworkers, and anybody else who's buying into a 401k plan is pumping in that money into the markets. You talk about Ponzi schemes, and Ponzi schemes are where people keep putting money in, and they see the rates of return, and it's great until they finally try to cash out. The good news is for everybody here is the vast majority are not going to try to pull all their money out of an IRA all at once, right? You have required minimum distributions at a certain age, but the odds are we're not going to all rush to close out an IRA, so we don't have to worry about that run on the bank and a huge systemic sell-off. But we are responsible for this market rally. We keep buying. I think the S&P 500 will close. Will be a sell the news moment. Yeah, I don't know. I mean, I'm trying to figure out what will be the catalyst for this to the downside, to be honest. Right now, you kind of have to keep that bullish trend. I've done well since November. I mean, I've done a lot of long trades. It's been great for me. I just had that one short that I did on NASDAQ, which is probably my only short in the past couple months. That's fine. I didn't really think we were going to have a big correction. I thought we'd drop maybe down to 4,700, but didn't work out for me. Fine. Going against this is really tough to do. Payday is tomorrow. Someone has to sell. No one has to sell. No one has to sell. I mean, I guess you're right. Someone's got it. We have to buy it from a seller, right? So they'll just go buy it and keep driving prices up. So yeah, I don't know when it's going to end up turning back down, but I think some point that's going to happen. I'm really, now more than ever, I'm expecting another black swan event. It's really been going on 3 years since COVID hit. And that was the black swan event that nobody saw coming. And then it was like, well, there it is. We're due. We're due for a black swan. I don't know if that would call that a black. Pepe says another bank fiasco. I don't know if that is a black swan event anymore. I think that the big banks, the ones that would be quote unquote systemic risks, have been shored up. I mean, if you're Jerome Powell and the FOMC and anybody who works at the Federal Reserve and you are not scrutinizing banks heavily after what happened to Silicon Valley, Signature Bank, First Republic, I mean, you should have been quaking in your boots. So I'm pretty sure that they have shored up most of the big stuff to prevent anything systemic. What I'm surprised at is banks have not raised the reserve requirements for banks. That's really what they should be doing to make sure that there is capital on hand to handle a run on banks. If you don't know what reserve requirement is, just type it in the chat and I'll explain it. But that is critical, in my opinion, to keeping our financial system stable. But when you have no reserve requirement for these banks, they're not required to hold a penny, then that makes them very susceptible to runs on banks because there's no funds there. And it also, in my opinion, it's designed to juice the economy. It's designed to take that money that's deposited, push it back out, help infrastructure growth and lending and all that stuff. But at a certain point, it increases the risk level, systemic risk, in my opinion. Let's see. There you go. Yep, Robert. I think the S&P. What else we got? So, by the way, if you saw Jerome Powell's, I believe it was on either the 60-minute piece or his press conference. I can't remember anymore because I'm watching too much Jerome Powell. If you watch that, he did specifically say we could see some other smaller regional banks fall apart and go under and go into bankruptcy protection. He said that. And I was like, oh, okay. If he is foreshadowing, in my opinion, that we are going to see some more, we are going to see some more. I don't think he left it out there. He wouldn't say that if there was no chance. So I believe that we are going to see some more banking, but I don't think it's going to be anything big. Personally, and I mentioned this before, my view is it's going to happen in the commercial lending banks, the banks that have more exposure to commercial lending. I have friends in San Francisco that I talk to regularly, and they're just like, man, it is bad here. Like, nobody wants to go to the offices. Everyone works from home. You got vacant buildings all over the place. He goes, you can actually find parking in the city because there's nobody there. It's like, oh, really? Man. So yeah, I think that's the next real big shoe to drop would be anybody who has exposure to commercial lending. And when those loans get rewritten, I don't think those buyers are going to be there for those loans. So it's going to be an ugly one. What's your opinion? Just increase reserves. I don't know. I haven't looked at that one. I really have to look more about NYCB. So I can't comment on New York Community Bank. Sorry, Infinite. I don't know their business model or what aspect of the financial world they're in. I mean, I know they're a bank, but what type of bank are they? This chart right here looks very similar to something like this. Let's go FRCB. Does those pictures look kind of similar? Right? It was been in a downtrend, looking pretty weak, and all of a sudden has a huge drop in price. Well, this was First Republic, and look what happened to First Republic. Now you're down in 7 cents. And this thing was $120 and fell to 7 cents. I would not personally, if you look at that NYCB, you have a similar picture. It was struggling and all of a sudden drops from 10.50, gaps down to about $6. Now you're at $4.19. This is catching a falling knife, and I just don't see. I wouldn't want to put myself at that risk of buying this one. Now, could you go out there and buy some long, or if it's liquid enough, sell some puts against this thing at like $3 and take a chance? You could, and you probably get some big premium. But it looks like, based on what I've seen with these other charts, and again, I saw this with First Republic, I saw it with Signature, I saw it with Silicon Valley Bank. The charts look like this. Big gap down. They started to fall off the cliff, and they never looked back. So, personally, I wouldn't touch it. I know a value investor is going to look at this thing and go, oh my God, it's down over 50%. Yeah, well, it could go to zero, right? So I'd be very, 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 very careful with this one. I wouldn't touch it with a 10-foot pole. Just I've been burned before. I had FRCB as well. Lucky it was a small position, but yeah, this does look like bad news. And I haven't looked at the news personally, but their earnings isn't good. The past 2 quarters they've missed big. They lost 36 cents per share. They're just losing money hand over fist right now. Not looking good. Fidelity added 1% Bitcoin position to its all-in-one conservative ETF. Ooh, I did not hear that one. That's good to know. Yeah, Big Ab, I made this point. I mean, I almost sound like I'm a fanboy, which I would argue I am a fanboy for Bitcoin. But I'll be honest here. If I see good news for something, great. If I see bad news for something, great. I will absorb all that information to formulate my opinion about something before I jump on that bandwagon. At this point, I'm definitely a fanboy of Bitcoin and what it can offer. And I mentioned that it's adoption. And now that we have the Bitcoin ETF legalized, the spot Bitcoin ETF, and trading on our markets, that opens a doorway for Bitcoin to find its way into more portfolios. So I think more will follow suit. I absolutely think more will follow suit and start adding it. What I really think is going to be the game changer. I think people said of 2023, the word they hated most was game changer. So I'll use it 3 times on the show. The game changer is we start to see companies put Bitcoin on their balance sheet. That's the game changer. 4 times I said it. You have Tesla still has some. I believe they still have some on their balance sheet. They sold some. I don't think they sold all of theirs. I think 30,500 was their average price. So they're doing good on their Bitcoin at this point. But Apple's got, if I'm not mistaken, Apple has, I think, $48 billion or $60 billion in free flow cash. Let me see here real quick. Let me bring it up for you guys. So I don't like quoting numbers and pulling them out of thin air. So I want to make sure I get the numbers right. Do you see a short squeeze for NYCB? Possibly. But, where's that going to come from? It's going to come from a Wall Street Bets type of group, Reddit type of group. What you're going to have is hedge funds and institutions pushing that thing. They're shorting the hell out of it probably because because they've read the numbers. The writing is on the wall for it, so they will probably keep going on. $338 million for Tesla, $338 million worth of Bitcoin. Because I think they bought $1 billion at one point. Why is it not letting me search for symbols? Let's go AAPL. All right, here's Apple. And to find that, you'll go over here to, they changed everything on me. Statistics. I hate when websites change their functions. And I'll scroll down here to, should be on cash. Total cash. They have $73 billion in cash. So just imagine if they did 1%. That's $700 million that they would drop into Bitcoin. And remember, if you go back to the math of it all, if you get a buyer bringing in $700 million into that space, Bitcoin's going to surge. And I think you're going to see more of this. I think now that we have the spot Bitcoin ETF approved, it is definitely clear in the eyes of the SEC, companies will start adding it to their balance sheet. Now, of course, it has to be approved by shareholders. It's going to have to be, board of directors going to have to say that because that's a pretty risky proposition. But when you have institutions adding it to their coffers, that is a huge boost for share price or for coin price of Bitcoin. How bad do you think equities would drop, and for how long? If there was hypothetically one nuke blast into a non-NATO country, would you buy 3 or 4 weeks later? I don't even want to think that way. I really hope that doesn't happen. It doesn't matter what country it is. Let's hope we're smart enough not to do anything like that. I guess it really depends on the situation. I pray that never happens. I really just don't ever want to see that one happen. But if it does happen, if there is a major conflict and things really escalate, I would assess the situation and see what would prosper in that environment. And I don't want to sound like I'm someone who's going to try to take advantage of the situation, but it's just what the world will be dealt, and how do I position myself to benefit from that situation, which I know sounds horrible in those types of, I told you about my Italian time when that plane ran into the building. I just started shorting everything. I can't say I would definitively buy a couple weeks later. I would have to wait and see. I really don't know. I hope I never have to make that decision, but, most likely the markets have a knee-jerk reaction, and then, if a nuke fell on a country, depending on what country it is, you got to think that the retaliation level is going to be exponential. Heaven forbid it happens here in the U.S., because we'll just start dropping bombs on everybody. So, well, let's hope that never happens. That's a charred black swan event. Ouch, too soon, Big App, too soon. But if there is a major event like that, you wait a minute. You don't jump on it right away unless you are privy to it right away. So, for example, somebody said, it was a really funny comment, but very true. So, was it the Alaska Airlines that had the door blow out, right? I'm pretty sure it was Alaska. Imagine you're on the plane and you see the door blow out. Now, of course, I'm pretty sure that most of the passengers were freaking out, losing their minds. Somebody posted and says, if I was on the plane, it said hypothetically, if I was on the plane and I went and shorted Boeing and Alaska Airlines stocks with all my money, is that insider trading? And I was like, well, that's a great question. It's not insider trading. You were there living the moment. How's it insider trading? That type of stuff. Yeah, I would do that. I would definitely do that if I saw a situation happen and that's going to cause a certain reaction. Yeah. Anyway, let me move on there before I get myself in trouble. So apparently you guys like the. Oh, it was American Airlines? I thought it was Alaska. Did they stop serving drinks to the plane? Yeah, Margaret, you're basically stuck insider plane trading. That's good. Yeah, I'm pretty sure they're not doing anything. I mean, you're basically hoping that debris or stuff doesn't hit you in the head. Just curl up in the fetal position and try not to freak out. Apparently, some of you guys liked the show I did on Tuesday talking about my favorite altcoins. I got this question from Scott. He says, what do you think of Bitcoin Cash? Isn't it better than Bitcoin? No, it's not better than Bitcoin. So for those that, it was Alaska. Thank you, Liz. I thought it was Alaska. For those who are in the space, Bitcoin in 2017 had a lot of internal turmoil. A lot of the true Bitcoin holders want Bitcoin to stay at the original formula and original equations that Satoshi Nakamoto created, which is block time every 10 minutes. The block size is 1 megabyte. So only 1 megabyte worth of transactional data can fit in there. And there's a bunch of other pieces. Bitcoin Cash said it can't handle the amount of transactions that the world could ultimately put on that blockchain. So we're gonna modify the code. And the community said, no, you're not. And so Roger Ver, who's a venture capitalist, did a money grab and tried to make a whole bunch of money, which he did, by forking Bitcoin. So what happens is if you held Bitcoin, I think it was in November of 2017, which I did hold, you now own Bitcoin and you had Bitcoin Cash. Bitcoin Cash to me is just a money grab. Nobody really uses Bitcoin Cash. It's slowly fading away and in my opinion will ultimately disappear. Bitcoin will stick around. Is it better to have an 8 megabyte block? That's what makes Bitcoin Cash better, as an 8 megabyte block. You can do a lot more transactions per block. However, they're not even filling up 1 megabytes at Bitcoin Cash. No one is using Bitcoin Cash. The other problem there is, remember, every block of data would be 8 megabytes. So now all of a sudden, the size of the blockchain to store that data is going to get exponentially higher. I mean, right now, Bitcoin's blockchain is roughly, I want to say it's 600 gigs. 600 gigs is how much that blockchain is right now. Now, if you have Bitcoin Cash and each block is 8 megabytes, now you're talking 8 times bigger. What are you going to do for storage? It's going to be hard for people like me to have a node in my house that's going to be, 32 gig or 32 terabyte storage space to handle their blockchain. I think it's going to fade away. No problem, Liz. Have a great day. Thank you for joining as usual. So as far as markets go, I didn't do our top 8. Let's look at that real quick. Interesting to see this change here between gold and silver. You guys see the gold was down 0.19% today, but I thought it was really interesting with SLV. SLV had a nice pop today of 1.75%. Of course, you guys know I have a monster position in silver, so I'm happy to see it rally up here. But all things are not looking very positive right now overall for silver, but that's nice to see it up 1.5%, even though gold is still just traversing sideways here. So Tom, your GLD might be a great spread trade or iron condor for you. S&P 500. Up 0.05% today. Really not much change. You had this really weird, small, little narrow range day. I mean, look how tiny that candle is today compared to anything else you see on this chart. The last time we saw a range that tiny was back in December 28th, which is a low volume, low liquid day. So very interesting to see this little kind of spinning top formation on the S&P today. Here's your dollar index. Was really nothing big here, although it does look like an inverted hammer. Down or up 0.08% for the dollar index. Your bond yields right now, they're up 0.1%. They were up a little bit more than that today. It's in the new session right now. Nice recovery, but it's holding right against those highs we hit about 2 weeks ago. So until we break above that and get above this overhead supply line I have drawn about 4.25, I expect it to kind of just traverse sideways until we get above that. NASDAQ. Hallelujah. All-time intraday high, all-time closing high. Things looking great. I mean, it's been just incredible for the NASDAQ. Congratulations to those of you who are long. Of course, I told you I got burned on this one. Not burned, just took a little bit of a loss. Not that big of a deal. But technically, looks like it's going higher. Now, the only thing that gives me consternation, I love using weird words, about this candle today is its hesitation. Right? When you have a candle like that, it's not high volume, but it's just this nothing happened. It means people are waiting to see what happens, which means another big move is coming one way or the other. We'll wait and see which way that is. Russell 2000 gaining back some of those losses we've seen over the past couple weeks. The last 3 days have been pretty darn good, especially today. 1.54% move up for the Russell to 1987. 2000 is right above us. Then you have some overhead supply right around 20.25. All in all, it's going sideways. Now, Bitcoin. This has been the good one. You notice it's picking up momentum. The last 3 days, momentum's gotten bigger and bigger and bigger. Things are starting to stretch out here. It may be because of moves like Big Eb was saying that I haven't seen, but the Fidelity is now putting this in one of their funds, at least a small percentage of Bitcoin. That's institutional buying, right? When you get mutual funds, start adding this to portfolios, you are going to see a bottom put in on Bitcoin, and it's going to keep on rallying and rallying and rallying. So all in all, I think Bitcoin's headed back to that 48,000 mark, and I think, but in the next couple months, we will be breaking those highs and possibly even challenging all-time highs by the end of this year. I didn't think we would rally that much, honestly. I kind of thought we'd be around the 50,000 mark by November of this year, and then the big rally start. As you guys know, I believe that from November of this year to November of 2025 is where you're going to see. You're going to come in and just be like, oh my God, it's up another 20% today? Holy cow, it's up 30%. It's going to have that all of a sudden escalated move, and not sure what's going to fuel it, but it's happened time and time and time again. You know, I can real quickly, if you would like, how much time we got? We got time. Let me just show you, because I know a lot of you are going, Merlin, you're pipe dream, you're smoking hopium, bud. Well, look, I'm just a pattern guy. So if you go back here and look at the last 4-year cycle, from November of 2020 to November of 2021, right here, you had a 390% move in Bitcoin just in the last year of that 4-year cycle. Let's go back to the 4-year cycle before that. Let's go to November. I peeked out into that. Let's go to November 2016. Right there. Come on, Merlin. November 2016 to November 2017. It's actually December. 4,305%. But wait, that can't happen all the time. All right, well, let's go back to this one. From November of 2013, November 2014. Let's go to November 2000. Bear with me. Actually, November 2012. Got to get the exact numbers here. November 2012 to November 2013, 9,433%. So Tom is going to go for the logarithmic scale. Let me see if I can get that set to logarithmic for you. There you go. So either way, it's that last year. This one looks weird. It's that last year that is just absolutely monstrous with regards to gains. So I don't see why that's going to change this time. And you guys can see I already have the lines drawn in here. All right. And based off of that, based off my numbers, you're looking right around $250,000 to $300,000. So there we go. MicroStrategy. Well, when you have Bitcoin move like it did today, remember, MicroStrategy is one of the single biggest businesses that hold Bitcoin. Show the all-time view. Yeah, let me go. So what happened, Tom, is I can't get the all-time view on this because Bitcoin, there is no chart on Bitcoin that goes back to the early days. Let me just, excuse me as I zoom out here. If you look at this, there is no chart that goes back to 2009. The earliest one I've seen is 2011. I've seen some that started in 2010, but this actually starts in 2011. So no more pullback through 39,000. I don't think so, Lisa. I think that the bottom is in. I think that, you know, I'm biased, so I'm very clear on that one. But if you look at what's happened here with Bitcoin, you know, this was its chance to really sell off and make new lows. You had FTX sell $1 billion worth of Bitcoin. $1 billion they sold of Bitcoin, and that's all it did. So now they don't have that Bitcoin to sell anymore. It looks to me like there's more upside potential here, and you have more adoption coming. So yeah, I'm definitely feeling fairly optimistic about Bitcoin at this point. It's defying what I thought it would do. I thought we would drift slightly higher for the next few months. But remember, we have the halving coming. Halving's going to happen end of April. Supply starts to drop. Yeah. Well, hey, Lisa, again, I don't know. It may go lower. I mean, could we get back to 39,000? Sure. Hell, we could get down to 25,000. Anything can happen with this thing. If Satoshi Nakamoto all of a sudden activated his account, his wallet, and sold his 1 million Bitcoin, Bitcoin's going to crash. Huge. Massive crash. But based off of the normal sequence of events going forward, I anticipate Bitcoin rallying and continuing to move to the upside here. So let me look at, there's really nothing on the earnings calendar that's exciting for tomorrow. There's a couple little small names, so I will start there and then I'll get to your economic calendar. Hard to believe it's already Friday. Here is what you got cooking for the 9th. You've got Canopy Growth before market opens, but they always seem to delay. You've got Pepsi, Honda Motor Company. Other than that, not a lot of big names. On the economic calendar, though, let's make sure I got my weekly on here. Let's go down to Friday's action. You have nothing for the U.S. Now, today we had a few announcements, but I didn't think anything was that, come on, let me rewind it here. It didn't get me the current data. There you go. I didn't think anything was that alarming or interesting. You had mortgage delinquencies increase, but 3.88 is not that bad. If we start to get higher numbers, right, like get up to that 8, 9, 10%, then we got some issues. But this is mortgage delinquencies going all the way back into 2005, 18 years. We are very, very low. However, we have seen for the past 3 months a pretty good increase in mortgage delinquencies, and something to keep your eye on. If that trend does start to go up even more and you see it get even higher and higher, that's potentially going to be a big bearish factor for the housing market, which I think is a domino that could push the equity markets down, but not yet. We'll just wait and see if this rallies, or continues to rally like this. Not a good sign to have those numbers increase, but other than that, you had natural gas storage, but no other big events for today. So that, my friends, is it. Thursday, I thought I would do a short show today, and here we are at 50 minutes. Unbelievable. Anyway, if you guys have something you want me to discuss, I want to thank Scott for the Bitcoin Cash question and Merlin for your question on ARM. Very interesting company. Who knows what's going to ultimately pan out of it, but seems to be a very interesting trend with ARM and the way that chips are manufactured, custom tailoring it to what customers want as opposed to just building something and hope everyone will use it. So very good. I do not know anything about Bill, Michael. I'll bring it up. Actually, let me look at the ticker symbol here. Right, of course, right as I'm about to wrap up, you asked me that question. This is just a 3-month T-bill. So what happens is it rallies up and then it pays a dividend, and the dividend is offset, so it drops by 40 cents. So you're wondering like, well, why don't I just buy it and sell right before it drops? Well, you could, but when it drops, you're just getting the interest payment. Oh, BILO, okay. Is this? Yeah, no idea. Never heard of him, don't know anything about him. Technically on the chart, you're in a downtrend, you're below the moving averages, lower lows, lower highs. I would say stay short on this one if you have it. So other than that, I don't know anything about it. All right, that's going to do it. I got to go. So hope you enjoyed. If you are new, hit that subscribe button. Feel free to ask me questions. I always build these shows around what you guys want to hear. I mean, I could just talk about markets. So, Marlon's question about ARM was a great one. Hopefully that helped. I'm glad you liked that, Margaret. If you have something you want me to discuss on a future show, just email me, TraderMerlin@gmail.com, or put a comment down below any of the YouTube videos, and I will address those and put them into the show content. Until then, happy Friday coming up. I will see you tomorrow. Take care, everybody.